Welcome to the ETF Show, taped right here at the New York Stock Exchange. I'm your host, Kristen Myers, ETF Editor-in-Chief for Asset TV. So today we're going to be talking all about leveraged and inverse ETFs. Now listen to this. Leveraged and inverse ETFs have been exploding in popularity, and the category has grown from just 2% of total ETF assets to nearly 10% over the past 10 years. And while net flows into the category were fairly flat in 2025, large daily trading volume shows just how much investors wish to capture volatility with these trading tools. So here to discuss more, we have Bilal Little, Global ETF Strategist at Direxion. Bilal, thank you so much for joining us today.
Thanks for having me. Excited to
So
be here.
glad. Yeah, I'm so glad we're getting to chat this conversation. So first, do a little bit of scene setting for me. As I just mentioned, we've seen so much explosion and growth inside of this category. Can you talk to us a little bit about how leverage and inverse ETFs, that entire universe, has really evolved over the last few years?
Yeah, no, so good question. I think like to set the stage about where the industry has gone and sort of where we are today, you go back to when these products were initially developed, which was basically during the financial crisis. They were developed as trading tools, really for liquidity to get expression in the market one way or another. What you've seen basically was the development take place from 2010 to 2019, where the asset flow didn't grow that much. It had grown to maybe $40 billion and then quickly retraced a little bit going back into obviously 2020. And I think that was the catalyst for what you see today. So today the market has, approximately $200 billion in assets. It's only 600 total products. When you take that in totality compared to the total ETF landscape, you're talking 5,500 products, over $15 trillion, still small, but evolving. So what we're seeing right now with the evolution is you're seeing two different things, I think. One, I think the single stock ETFs are really pulling the industry forward. But also I think the trading environment has evolved as well to where investors want to express precision and I would say more accuracy on how they take trades in the portfolio. And these ETF vehicles have actually done really, really well to help them.
So how has the investor profile then, do you think, changed between when these products first came to market in, 2010 and 2019 and what we see today?
Well, I think two things have changed. One, I think it's no longer just an institutional product or tool. It's now used for retail investors. And retail investors are not just your YOLO trade investors today, right? Like they are much more sophisticated. They have more access to tools and resources, and they are really focused on both fundamentals and technical trading. And our job at Direxion is to build the best tools for them to express their views. So I would say the evolution really took place in the investor. And that's probably the most important because they want to, I would say, make up for lost income right now. They also want to grow at a faster clip than what they've been preached or taught, which has been, right, 6 or 7%, set it and forget it. They want a little more octane, and these vehicles allow them to do so. So I think you see basically evolution on both ends.
Octane. I actually love that word to describe this. Okay. We're going to get into all of those things, right, around the single stock, some of the innovation that we're seeing. But really quickly, I'm curious to know what you would say some of the biggest misconceptions about these products are going to be, maybe even paired with that idea that perhaps, maybe the retail investor, which, as you mentioned, is far more sophisticated than a lot of people give them credit for, maybe shouldn't even be using these products, right?
Yeah.
That they might be gambling.
So the one thing that I think we lean on as our hallmark is education. Education is the foundation to understanding the risk dynamics of any investment. And risk isn't bad or good, it just is. You just need to understand what it is. So these investment vehicles present, I think, an interesting opportunity for people to learn about an emerging space within the ETF landscape, which is L&I, which is leveraged and inverse, but also how these products function. So one thing that I want to level set, and I think is very important for all investors to know, is when you think about the term derivative, when we think about derivative, most people just throw out options and futures because a lot of people trade those, and the retail public trades those pretty frequently. The third sort of pillar of the derivative chain is swaps, which is basically just a contract between two parties in which one agrees to get exposure to the underlying asset. And we think that is a very functional way that we can express our views in an ETF that investors can then lean on institutional resources, innovation, and capabilities, but then get it in a wrapper that's much more efficient and fluid for them to trade and invest.
And for the average everyday investor, they can't access the swaps market unless they are going through
An
an
ETF.
ETF.
Exactly.
So I want to talk about innovation. The pace of innovation has very drastically changed. Two questions here. One, what do you think is driving that innovation sort of parade that we're sort of seeing? And two, chicken or the egg kind of question, right? What's coming first in that innovation? Is it, issuers like Direxion that are wanting to push out into new frontiers, or is it that's just the next products that are coming to market because the investor is demanding it?
So I'm going to lean on the side that the investor is really creating a lot of the demand today. And I'll tell you why. Initially, when we got into business, we wanted to build investment tools that would be favorable for traders, typically in the suite and space that we knew really well, which is the institutional side. And then I think from COVID, you've seen the emergence of the retail investor and trader, and that includes, I would say, even some RIAs that do CMT or like technical trading for their clients as well. So people want to express more precision and build durable portfolios given the market dynamics. Now, let me just go back to your initial part of the question. So the demand. So the demand that you've seen take place in the LNI space right now has been single stock, right? Names, because the IPO is driving so much attention in the market, and retail has that FOMO component of, hey, it's an option. Like, hey, it's in market. I'm going to buy. Maybe I go up. Maybe I go down. And what we think could be said around that is maybe we can build better tools with LNI ETFs, but then coach and teach people about why these products are structured the way they are, and then the risks that are associated with them. So let me give you just a quick example of how I want to draw this parallel. So retail is loving the IPO market. And guess what? So does the news cycle.
Yeah.
Every media outlet is picking up, hey, what's going on with Micron? What's going on with SpaceX? What's going on with
Don't think I haven't noticed your
every name?
pin.
Yes, right. So I'll hit
Recent
that.
IPO ETF, which we will discuss.
We will discuss. But what they are really battling for is eyeballs. They're battling for attention.
Right.
And the retail trading market is paying attention to where the news is, where they can make stronger bets. So I think that's some of the evolution. So we decide to build durable products that have multiple trading cycles and opportunities in the life of that product.
So to that point, as you mentioned, a lot of the innovation that we're seeing, it was single stock, and we've now moved into the IPO market. How does Direxion decide that a stock or a story has staying power, right? Before you decide to actually make a product for it?
Oh, perfect question. I'll use SpaceX as the example, right? Because that's the one that's dominated the news. So you come to market at $1.7 trillion, so largest IPO in history. You have two very strong days out of the market as far as like the interest goes. So the stock goes up 35, 40%. Everyone's talking about it. And then you have 5 consecutive trading sessions when it's actually down. Right now it's sitting in a trading pattern between 150 and 160 or so. So what that does for us is, one, there's the option that the retail market jumped in and they said, hey, maybe this is my high flyer. Maybe I can just ride this wave. And then the market sells off. Now it's in a trading pattern that traders can actually still make money both on the up and down side based off of what's happening in the market. Now the news for next week is what? SpaceX is going to be entered into the NASDAQ 100. So you're talking about staying power. Now you have the evolution of SpaceX's IPO. Now it's in a trading pattern. Now it's getting ready to be adopted into NASDAQ's top 100. So think about the index exposure of the Qs, all of the investors there. So what we've done, just to give you an example, and I'll shorten this, that's why we built Loft, ticker LOF. And the reason is we wanted to give traders 2x exposure to SpaceX. But then behind that, we also have a product which is QQQE, which is the equally weighted Qs. Why is that important? Is because IPOs typically have a lot of volatility when they come to market. We already see that right now with SpaceX, but it's getting ready to have a sizable position inside of a major index. Why is that important? Because volatility is here to stay, and I think we're in a trader's market.
Right. And we're seeing more and more a lot of investors wanting to capture that volatility, and a lot more products coming to market to essentially do
100%.
just that. Okay, so you mentioned LOF, which I'm assuming stands for liftoff.
Correct.
Okay, thank
We
you.
try to be clever with it. You gotta have some fun.
I'm
You picked
guessing.
it up.
Okay,
Yeah.
so I'm gonna read out the full title: Direxion's Daily SpaceX Bull 2 times ETF. Full name for LOF. Okay, so then where does a product like LOF essentially fit into a portfolio, especially after we move beyond that hype, right? Because you have to imagine that the volatility is going to continue for a while. That's essentially why a trader might want it in their portfolio.
So I
So
want to
how
be
do you think
very
investors are
clear,
thinking about?
very clear. Our levered products are designed, L&I products are designed for trading, daily trading. They're not designed for buy and hold. And the reason is because you actually have additional risks associated with the leverage in the portfolio. So because of that, we tell people they should not actually buy and hold it. So it's not a portfolio hold.
Yes.
QQQE would be the hold because that has a longer term profile. That would be a staple in a portfolio when you are late stage cycle and you still want exposure to SpaceX. But you don't want the volatility that could possibly come with a new IPO. So that's the difference in the nuance between the two products. And we want to make sure that most folks understand that these products are designed for trading only.
And I do want to actually ask you about your buy and hold products, but I want to stick here
Yeah,
on
for
this like
sure.
sort of IPO market, things like we have SpaceX. So, and you mentioned this earlier, and I'm hoping you can say a little bit more because when traders are purchasing a product like LOF, right, or any other sort of single stock or levered product, are you thinking, and especially when it comes to the IPO, are they expressing their belief in a fundamental? Are they expressing their belief in momentum? Do you think they're just trying to capture volatility and hype? And I know the SpaceX story is a little bit different just because of the enigma that surrounds Elon Musk, but just generally speaking, when you see traders coming into that, purchasing that product, what do you think they're expressing there with that purchase?
So a few things. I think it's across the spectrum. So when you think across the spectrum, think about education level. Think about technical trading levels. Think about fundamental understanding levels. So I think the spectrum is pretty broad on the retail side. You have a handful of people who say, you know what, I just want the hype of Elon and I want to hold this for the long period. No matter how much we try to communicate to them, these are
Think
trading
that they should
vehicles.
not hold it for the long term.
That's not right. We
Right.
do our very best. So we send them to Direxion.com. We have a ton of information. It's a great place to continue to learn. But then you actually say, you know what? There's a catering, there's a group that we need to cater to. That's the folks who really understand the technicals and fundamentals. And they believe that the stock has, let's call it a floor, and it's going to be trading in a window for a period of time. Well, how can they express those views? If you're bullish on Tesla and you believe that it has an opportunity to run for a day or two, well, now you can turn on a trade where you can actually get 2x exposure. And now your conviction is actually met. So that's a second group that we really want to focus on. But then there's the other group that, again, I don't think they want to hold the product for more than a few hours. And liquidity in an ETF provides that sort of entry and exit point for a lot of these either high frequency traders and or hedge funds or even RIAs that want to do something a little more exotic for their clients. But again, let me just take a step back. The industry knows us for this space, meaning single stock as well as, I would say, the semis. So our largest product is say it, you know SOL, say it for me.
SOXL. Of
Exactly,
course,
right?
I know. Of
So
course, I know.
that's
Yeah.
a $30 billion product to give you 3x exposure to the semis. But our largest single stock product is Tesla. It's TSLL.
I
You know that
surprisingly
too.
know a lot
So
of the
people know us
direction
for
suite.
the
Yes.
products,
Yes.
right? And we want them to know that we build products for traders across the spectrum. And now we are actually continuously expanding for the longer term buy and hold strategies with QQQE.
Okay, so advisors, investors, et cetera, that are watching this, I'm going to rely on your expertise. We just had SpaceX.
Yep.
What's next? The next big IPO that you think is going to be capturing a lot of investor interest? There's Anthropic. We've heard of OpenAI. Is there another one on the market that I haven't just mentioned? Tell me what you think everyone's going to be looking
This
to
is
next.
very timely that you bring this up. So again, I think Anthropic and OpenAI clearly are the IPO darlings that will come to market. But I think what's going to hit the market in the next couple of weeks is the ADR for SK Hynix.
Okay.
And that's obviously the world's second largest memory chip provider.
Yep.
And this is going to be the first time that US investors will really be able to participate direct ownership. Now, a couple of things to take into account there, in my opinion, is one, historically people have owned exposure to SK Hynix through like a securities exchange or not exchange, an index fund. And our investors have had a phenomenal run with Koryu. Koru. Yeah, sorry.
That one I don't know, but
Okay.
okay.
So it's a Korean exchange, it's
Uh-huh.
triple leverage. But why is that important is because just getting that exposure, they actually have had exposure to SK Hynix. But now let's say you're a trader and you really want to lean into that trade and you be like, you know what? I think the memory chip space still has a lot more room. I think they're going to produce earnings and numbers like Micron, right? from a memory chip perspective. So how can I express that? So I think in the future,
Well, the
you're going to see
memory chip
more people.
space has been exploded. I won't
That's the
mention
expansion.
the other
Yeah,
ETF
but that's the expansion.
from Roundhill,
Yeah,
DRAM,
that's okay.
but it's received a massive number of inflows.
It has over $20 billion. And again, I think what that is that's market demand, right? So they build the product and the market comes. But I think in this space, to your point about what's going to happen in continued launches, I think that's going to pick up some serious demand outside of Anthropic and OpenAI.
Okay, so the next piece is then how is Direxion thinking about these companies that haven't yet gone public?
Yeah.
Are there sort of signals or things that Direxion needs to see that you guys really need to see that you're like, okay, this product can definitely be viable?
Yeah, I think a few things. One, does it have the ability to trade? Is it a durable trading product? Again, that's who we build the products for, the trader. The second is, will there be multiple cycles in which this product will have a life, meaning the lifespan of this trading vehicle? Products fall out of favor, stocks fall out of favor. So we want products that give traders the ability to express their views.
So speaking of views, particularly in the AI space, as we were just talking about chips, are you seeing investors broaden their focus? Because it used to just be chips, hyperscalers.
Yeah.
Where are you seeing them start to look now?
So it's a good question. I think there'll be two areas I think that will come into scope and focus here in the near future. One will be energy and power, which will be really important, right? Because now that we've made more infrastructure play, but that's down. That's a third derivative, if you will, if memory chips was the second. And then I think healthcare. I think in the space of AI, there have been several announcements by OpenAI, NVIDIA, and several others. They are now starting to go into monetization mode, meaning where can we actually implement application and utility and where there's significant ROI. And I think you're going to see that at both the front end and the back end of the healthcare space. So when you start thinking about imaging or diagnostics, support research, that's going to be big. But then on the back end, the infrastructure for client documentation and I would say processes around new drug innovation could be really, really strong support systems.
Flows. Where are you seeing capital flows
It's
heading
a
to next?
very interesting and timely question. So when it comes to flows, we actually, and I'm just going to use Micron as an example. So we have the largest Micron ETF, which is MUU, and that's another levered product. But Micron killed it on earnings. I mean, 80
Yes.
plus
Yeah.
percent margins,
Yeah.
numbers just like would wow anyone.
Yeah.
The stock sold off right before, obviously, where it sort of landed at around 1100 or so.
Popped massively
Popped
day of
14% of
earnings. Yeah.
earnings as an example, but it didn't reach its peak, its previous peak of 1250 or wherever it was. And then guess what? It's now been trading under 1150. And this company arguably is in a very sweet spot on the memory side. It's the world leader. But guess what? There's a rotation of capital because now the market is saying, well, where else can we go out and identify areas? And we've seen actually a pop in healthcare. So healthcare, both pharmaceuticals, bio, and just the broad index and exposure there. So we have tickers PILL, we have tickers Q. I'm not going to say these.
These are so
Cure,
clever, Pill.
Cure, Pill, Cure, CURE, and then we have Lab U. So we have three different ways that you can play it. In my opinion, small caps have picked up some capital. Healthcare from a sector's picked up some capital. You've seen some other defensive areas pick up some capital. And I think the market is just rotating.
I will say this, despite the sell-off in Micron stock, we did not see the same sort of thing happen, at least looking at the flows for semiconductor ETFs.
Correct.
They continue to perform incredibly well. I think probably a lot of investors saw that buying opportunity and just decided to buy in on some of these ETFs.
Yeah.
So you just mentioned some of those themes. I'm curious what themes are seeing the biggest change in investor interest right now.
You know, it's a good question. I think the investor today has a little bit of fatigue. There's a bunch of IPOs that have hit the market. Everyone's trying to figure out where the next emerging opportunity is. We're coming off a quarter. Let's just be frank here. First quarter was somewhat muted compared to the explosion that we saw in the second quarter around semis and memory chips, right? Like that's where all of the exposure of that unsaid ticker that you announced, that's where they got a lot of their momentum. But also, right, like the market is starved for a story. It's craving. The IPO SpaceX deal was so craved and the demand was so insane. it's embraced the private markets, right? Because private capital wants to exit at some point and come into the public markets. It's dominated the news when it comes to what's happening in data center space exploration, as well as will we actually see this new position now take and manifest a very sizable exposure in the market cap weighted index. That's going to be big. That's going to be the story that carries you into next week.
Okay, so then crystal ball time, and then I want to talk to you
Crystal
about
ball.
QQQ. Yes, might as well
Crystal ball.
pull out your crystal ball. What are some themes right now that you think investors are underappreciating and will kick themselves for not looking at 5, 10 years from now?
I think there's a few. I think revisiting, I would say precious metals, and Bitcoin as an example. Being able to express trading views there would be really interesting. I'd say Bitcoin, silver, Ethereum, and probably gold are some areas. I think obviously energy, which we talked about as well, just because of the demand. These chips are smaller, they're going to get hotter. We need to cool them better. We need to provide sustainable opportunities for them. And then I would say one other area that I've been really excited about is small caps and healthcare. You see a lot of momentum around both of those trades, and most people are underweight and underrepresented in both. And just think about it, outside of our generation, right? So I'm a millennial. This younger generation is much more health conscious than ever before, right? And if we lean into that trade and providing not only solutions, but also thinking about what they will want. And then also we have a large retirement group on the other end of the spectrum, 11,000 retirees a day, the largest number ever hitting 65, and they want to live longer. So I think healthcare is a conversation which I'll say a couple other points on it. It's been trading at a 30% discount to global equities. Again, underrepresented really since the COVID trade. No one's talked about that. And then you're seeing a lot of innovation take place around AI.
So, last question for you. I'm sure many folks know, but if they don't, Direxion is one of the largest issuers of leverage and inverse products, but that's not the only products that you guys have. And you've mentioned QQQE a few times.
Yeah.
So I want to kind of talk about that other side of the house, those actually buy and hold products that you guys do have. What's the thought process there in terms of having those types of products alongside these sort of tactical trading tools?
Yeah, I think the demand is going to continue to drive a lot of the innovation in that direction, and we want to be mindful of that. Again, our core client base is the retail investor, but we also realize that that investor is now bringing and introducing a lot of our products to their financial advisors. So the advisors also need products that they can build portfolios around, and that may be expressing longer time horizons. So I think areas that you'll see on the development side for us will be products that are a little more advisor friendly. So thinking about some income-based solutions here in the future, I think you're also going to see continued opportunities for long-only product. And then I think what we are really excited about is to continue to be the hallmark of high precision trading tools with our levered suite.
All right, Bilal Little, Global ETF Strategist at Direxion. Thank you so much for joining us today, and thank you for tuning in to the ETF Show.